Welcome back to John's today's tutorial. Today I will describe about 3 types of forex market analysis. Are you prepared for it? Hopefully you all are fine and prepared for my today's lesson, today's tutorial. So let's start. Market analysis. There's 3 types of analysis basically forex trader do. To begin, let's look the 3 ways on how you would analyze and develop ideas of trade the market. There are 3 basic types of the markets analysis: the technical, fundamental, and the sentimental analysis. There has always been a constant debate as to which analysis is better, but to tell you the truth, you need to know all 3. It's kind of like standing on a 3-legged stool. Understand? It's 3-legged stool. Without one, you cannot properly analyze the market. Technical analysis is the framework which forex traders study price movement. The theory is the person can look at the historical price movement and determine the current trading condition and the potential price movement. The main evidence for using technical analysis is that theoretically all current market information is reflected in price. If price reflect all the information that is out there, then price action is all one you really need to make a trade. Now, have you ever heard the old adage, history tends to repeat itself? Yes. Well, that's basically what technical analysis is all about. If a price level held as a key support or resistance in the past, traders will keep an eye out for it and base their trades around that historical price level. Look at the chart. I am describing it. A technical analysis look for similar patterns that have formed in the past and will form trade ideas, believing that price will act the same way that it did before. In the world of currency trading, when someone says technical analysis, the first thing that comes to mind is a chart. Yes, technical analysis use charts because they are the easiest way to visualize historical data. You can look at the past data to help you spot trends and patterns which could help find some great trading opportunities. What's more is that with all the traders who rely on technical analysis out 3, these price patterns and indicators signals tends to become self-fulfilling. As more and more forex traders look for certain price level and chart patterns, the more likely that these patterns will manifest themselves in the market. You should know though the technical analysis is very subjective. This is the fundamental analysis. Fundamental is the way of looking at the forex market by analyzing economic, social, political forces that may affect the supply and demands on an asset. If you think about it, this makes a whole lots of sense. Just like in our economics 101 classes, it's supply and demand that determines prices, or in our case the currency exchange rate. Using supply and demand as an indicator of where price could be headed is easy. The hard part is analyzing all of the factors and that affect supply and demand. In other order, you have to look at different factors to determine whose economy is rocking, like a Taylor Swift song, and whose economic sucks. You have to understand the reason of why and how certain events, like an increasing in the unemployment rate, affects a country's economy, and monetary policy, which ultimately affects the level of demands for its currency. The idea behind these types of analysis is that if a country's current or for future economic outlook is good, their currency should strengthen. The final is the fundamental analysis. For example, let's say that the US dollar has been gaining strength because the US economy is improving. As the economy gets better, raising interest rates may be needed to be control growth and inflation. Yes, higher currency value is good for economy, lower currency value is the bad for economy. The better shape of the country's economy is the more foreigner business and investor will invest in that country. This results in the need to purchase that currency, obtain those assets. Higher interest rate make dollar denominated financial asset more attractive. In order to get their hands on this level, asset traders and investors have to buy some greenbacks first. As a result, the value of the dollar will likely increase. Finally, the sentimental analysis. Sentimental analysis is nothing but about your mental pressure, mental sentiment. Earlier we said that price action should theoretically reflect all available market information. Unfortunately for us forex traders, it isn't the simple. The forex markets do not simply reflect all of the information out there, because traders will all just act the same way. Of course, that isn't how things work. This is why sentiment analysis is very important. Each trader has his or her own opinion of why the market is acting the way it does, and whether the trade in the some direction of the market or against it. The market is like Facebook. It's a complex network made of individuals who want to spam our news feeds. Kidding aside, the market basically represents what all traders, you, Warren Buffett or Callan from the down shop, feel about the market. Each trader's thoughts and opinion, which are expressed through whatever position they take, helps from the overall sentiment of the market regardless of what information is out there. The problem is that as retail traders, no matter how strongly you feel about a certain trade, you can't move the forex market in your favor. Even if you truly believe that the dollar is going to up but everyone else bearish on it, there's nothing much you can do about it, unless you are one of the George Soros, Goldman Sachs. As a trader, you have to take all this into consideration. You need to perform sentimental analysis. It's up to you to go how the market is feeling, whatever it is, bullish or bearish. Then you have to decide how you want to incorporate your perception of the market sentiment into your trading strategy. If you choose to simply ignore market sentiment, that's your choice, but hey, you are telling you now it's your losses. Being able to judge market sentiment, a sentiment analysis can be important tool in your toolbox. Which types of analysis is very important for forex trading? The $1,000,000 question. Throughout your journey as an aspiring forex trader, you will find strong advocates for each types of analysis. Do not be fooled by this one-sided extremist. One is not better than the other. They are all just different way to look at the market. At the end of the day, you should trade based on the type of forex analysis you are most comfortable and profitable with. To recap, technical analysis is the study of currency price movement on the charts, while fundamental analysis takes a look at how the country's economy is doing. Market sentiment analysis determines whether the market is bullish or bearish on the current or future fundamental outlook. Best analysis. Yes, market analysis, technical, fundamental, sentiment combines the tools. Let me pull out the three-legged stool again, just to emphasize the importance of all three types of analysis. Take out one or two legs of the stool and it's going to be shaky, right? Yes, you got it. Friends, if you have any question, then don't forget to comment below regarding your question. We will answer it, and if need, we will make a new video for you. Requirement: please share this video with your friends and subscribe to stay with us to get notification. Please click the bell button also. Thank you.